Hello and welcome to our brand new offering, Smart Money, your live investor query show. This week we look into the technical analysis of the market. In fact, it's going to be a deep dive into what we call technical analysis. How do you trade? When do you trade? Can you do day trading for a living? All of this we'll talk about over the next half an hour. We'll decode all of the jargon for you, understand some easy tools of technical analysis, and find out whether you can make a career out of day trading. So all that and more lined up in the next half an hour. First up, let's take you through all the key themes that we're going to focus on the show today. The 5 most important technical tools. The evolution of technical analysis in the new age of algos, social media, and ease of information. We also discuss what have been the key learnings for a stock market trader in the year 2020, which has been hit by the COVID-19 pandemic. And finally, do the textbook theories of the 70s, 80s, and 90s on technical analysis, intra-market relationships, asset allocation hold good in today's world or not? So much is what we're going to pack into the next half an hour. And to decode all of this for us, to demystify technical analysis, we have a guest who joins in on the show, someone who's been with us for a while, our friend, and of course someone who has a lot of wisdom with him. Gautam Shah of Goldilocks Premium Research is with us. Gautam, thank you so much for being with us in the show. You know, technical analysis is something which everyone wants to do, but they don't have the tools to do it. So if you just want to sort of this complicated business of trading, if you want to demystify it for us, what would your advice be to young investors and or to young traders rather, and what are the top 5 tools that you generally use for trading?
Good evening, Sonia. It's good to be talking to you after the market hours. Thank you for having me. I think technical analysis has become a very hot subject, particularly in 2020, given the fact that so many people have started to use it. And I think it's very important to respect price action. I think that's my first and foremost takeaway to people who are trying to use that, because price is everything. And I think a great example is what has happened in the last 4 months. Even before COVID came into play, you had the markets collapsing. So the price action told you that there was some problem somewhere. And this rally of the last 3 months has really caught a lot of people by surprise, because you really don't have too many good news on the ground, but the price action is clearly looking at something into the future. So I think respecting price has become very, very important in today's market action, and I think you just have to go by it. Also, I think it's very important to look at the bigger picture. I know there are a lot of people in the markets who are trying to take singles every day, trying to accumulate returns. But if you have to really create wealth at the markets, you have to look at the bigger picture. And all those people who I've spoken to who've done very well at the markets for the last few decades are ones who've created the bigger picture, caught the bigger picture. I'll simply give you an example. If you really, the law of averages will really, come to you at some point of time, and greed and fear are aspects, which get hold of you, how much ever, solid you might be on your fundamentals. So I think the bigger picture is extremely important, and look at the holistic picture. Take a holistic view at the markets, because I know there are so many technicians out there, so many people out there who are basing their analysis on a single study or a couple of studies. I don't think that really works in today's times. So you need to have as many aspects in your favor, at least have 5 or 6 triggers in your favor. And once you do that, I think it'll be much easier to capture trends. So having said all of that, I think the 5 tools that I really look at in my analysis would be the Dow theory. I think that's very important to understand the foundation of technical analysis. I would look at the moving averages. I would look at the holy grail indicator, which I call the RSI, the relative strength index, and some volume filters. So if you were to really use a combination of these 5 filters, I think it's going to really help you at the markets.
Okay, so that's what happens, right? I mean, there's so much jargon involved in technical analysis that it becomes a bit unnerving for a young trader to get into this space. So we've got a lot of queries coming in, Gautam. I'm going to dive straight into that and toss some of them to you. Our first query is coming in from Gaurav Taparia. So let's invite him on the show. Gaurav, go ahead. What's the question that you have for Gautam?
My name is Gautam Taparia, and I had a question. I am extremely interested in trading stocks, but unable to do it along with a full-time job. Should one attempt doing this together? If yes, how should I go about the same?
Okay, so, for someone who perhaps has a job as well and who wants to start trading, I mean, what would your advice be?
Well, trading is a lot of entertainment and excitement at the same time, but then you don't get into anything half-hearted. So I think you need to put in 100% before you get into anything. And given the kind of markets that you have right now, it's definitely not advisable to sort of get into intraday trading and do a job at the same time. However, you can obviously do positional trends, trends that play out over many days and many weeks, wherein you really don't have to look at the price action the entire day. You can just have a couple of looks on the screen during the day, and you can study the charts by the end of the day. So do not indulge in intraday trading and do a job at the same time. I don't think that's really going to be very fruitful. But as I said, if you are looking at positional trends, I think this is something that can easily be done.
Okay, all right. So something that can easily be done. But Gautam, how long does it really take for a trader when he begins to become, a kind of seasoned? I mean, how long did it take you, for example, to get your trade right?
Well, Sonia, we are not seasoned as yet. I'm still learning every passing day. In fact, 2020 has been such a learning experience. The fact that we witnessed the fastest bear market in history, no amount of experience, no amount of history at the markets would have really helped you. So you learn every single day. What's important is risk management. I think if you need to keep that seat belt on every single time you go out there and trade, and if you have a strong risk management in place, I think you'll do well for yourself. And I think this is very important in the context of what has happened in the last 5 months. So I think that's really the takeaway which I can give you.
Okay, we have a couple of more queries coming in. In fact, this time we have a query from someone who's not living in India. So we have an international viewer. Jaskirat is joining in. Jaskirat, thank you so much for tuning in. Go ahead and ask your question.
Hi, my name is Jaskirat, and first of all, thank you so much for taking this initiative. I've started doing swing trading with 20% of my invested capital, keeping 80% still for long-term investing. My question is, what should be our exit strategy? Like, everyone discusses about stop loss, right? But no one tells us what should be a profit margin we should aim for when it comes to swing trading. So yeah, this is my question. What should we aim for profit margins when it comes to swing trading? Thank you so much.
Okay, so what's his aim as far as the profit margin is concerned? That's a question we get asked all the time. I mean, you know an entry point, but you don't know where to keep your target. What should your profit margin be? How do you decide that, Gautam?
I think that's a very valid question. At the end of the day, we all believe in stop losses and you know what your risk is. But at the same time, if you have to do well at the markets and want to create wealth over a period of time, you have to ride the winners. And look at the price action of the last couple of months. There are so many stocks where I'm very sure a lot of people would have got out with 5%, 10% kind of a return, and they've gone on to give 50% to 100%. So I think it's very important for new traders to have a financial target and to have a technical target. Financial target is very important because it should really tell you as to how much you're comfortable with in terms of making money at the markets. And once your financial target on a particular trade is achieved, you can actually book partial profits and update the stop loss to your cost price. Once you do that, you can actually ride the winners all the way. I mean, there are so many examples. Just one stock, that comes to mind, Lotus Labs, a stock that doubled in 3 months. You could have easily got out with 5 to 10%, but if you actually rode the entire move, there was 80 to 100% to make. So I think trailing stops to cost after the initial profit booking is really the way forward.
Okay, so perhaps that's a good exit strategy that one would be looking at. We talk a lot about how to trade, but this is such a tough time to trade as well, right, Gautam? Because this is a time when you have so much data available on social media. There are social media trials of stocks, as we call it. How do you cut through the noise when you focus on your trading?
It's very difficult to cut through the noise, Sonia. I think, WhatsApp came into existence after 2008. 2008 was clearly the crash which everybody spoke about. And had WhatsApp as a social media been there, the scenario would have been completely different. Right now, because of algos, because of social media, and because of the fact that we have ease of information, trends are playing out really, really fast. I mean, the fact that you had a 40% dip and a 30% rise in a matter of 4 months really explains that. So I think one has to do a lot of filtering, and that's the reason I say that you have to follow a very holistic approach at the markets. Look at 5 or 6 technical indicators together. I think that's really the best way forward. And there is going to be a lot more volatility. These are times for volatility. There is going to be a lot of shakeouts. There is going to be a lot of disruption from time to time. But I think the best way to really play this is to restrict yourself to earnings and charts. The more you concentrate on social media, the more you concentrate on information, it's really not going to help you. And I think noise is really the new disruption. It's here to stay. And I think it's very important for people, as I said, to look at charts and earnings and just use both these tools, to make your stay at the markets more comfortable.
Okay, we are getting a lot of queries right now, and we're going to talk in depth about how to look at charts and, a little more about those tools that you spoke about. But we're going to take a very, very short break. When we come back, we'll discuss more themes. We'll answer a lot more of your queries, so don't go anywhere. Smart Money coming back in just a bit. Welcome back. You're still watching Smart Money on CNBC-TV18. We are in conversation with ACE technical expert Gautam Shah, and we're taking a lot of your queries. We're trying our best to demystify technical analysis for you. We have some queries coming in, but before that, Gautam, before the break, we were talking about how technical analysis has evolved over times. What time are we in right now? I mean, how does one really, what are the red flags that you need to look out for? And in this evolution of technical analysis, what is the biggest learning for you?
Well, I think 2020 has really taught us that buy and hold forever kind of investing is becoming more and more redundant. I think it's the kind of market where you really don't have visibility beyond a year. there is a lot of disruption. There are a lot of risks. The fact that you have COVID coming into play and just disrupting our lives so easily, it just tells you that, going forward, it's very difficult to buy and hold things over 3 years, 5 years, 10 years. And I think this concept of disruption is really likely to, stay. And I think it's very important to diversify yourself, not just across asset classes, but also across geographies. And I think that's really the way forward. I mean, look at the kind of move that gold and silver has given you. So it's not just equities. There is always a certain basket, certain asset class waiting to, to help your portfolio garner greater returns. So I think, as I said, diversifying across asset classes and geographies, I think is something which I would strongly recommend traders and investors.
Okay, we have some queries coming in thick and fast. So Simon Biju is our next caller. He joins in live. Simon, go ahead, ask us your question.
Good evening. My name is Simon Biju and I am from Kerala. I have been doing intraday trading for a few months now, and I was planning to shift to option trading in the near future. And ma'am, what do you think would be the most important difference between option trading and intraday trading? And for a beginner like me, what would be your advice before getting into something like option trading? That's my question, ma'am. Thank you.
Okay, first of all, Simon, congratulations. At such a young age, you've decided to get into trading and you're looking at, options trading, intraday trading. So, I mean, Gautam, I think when I was that age, I didn't even know what the meaning of trading was, let alone trade itself. But what is your advice? He's been doing intraday trading for a few months and he wants to shift to option trading. What are the risks involved and what's your advice to him?
Well, intraday stock trading takes into account the element of price, but then options trading take into account the element of price and time. And usually for beginners, I think it's extremely difficult to understand the concept of time. So I would strongly recommend that people first master, price action trading itself, which can be comfortably done with trading stocks or futures on an intraday or over a short-term period. And once you master that, you really cannot master that, but at least you get a hang of that, then probably you can get into options, because options are extremely dangerous. And given the kind of volatility that Indian markets have seen in the last few months, I think it's very important that you just stick to price for now, because the time element, while it can make you serious amount of return over a period of time, it can also take away capital really, really fast. And I think it's really not been so easy at the markets in the last many months. So master price first, then get into price and time.
Okay, master price first and then get into price and time. That's important information. You were speaking about the learnings from 2020 and you did mention that buy and hold forever investing could be getting redundant. You said disruption is the new red flag. Also, diversification across asset classes is important. But I want to understand, how does one play a theme? Because now you're seeing a lot of these themes come out, whether it is the chemical companies, whether it's auto ancillary companies, a lot of these packaging companies. How do you know when to enter and when to exit?
Well, see, no bull market or no bear trend is the same. I mean, as this recovery started, we went back to looking at 2008. A lot of people went back to looking at 1987, 1929. But history has really not helped in this entire market behavior of the last few months. I think it's very, very important to diversify yourself, the point I mentioned earlier. And because intermarket relationships are not working as well, it's important to be in the right pocket using the concept of relative strength. I think that's a tool which we have been using very regularly, at Goldilocks, and it's really worked for us over the last many months. And this is again a very unique recovery, because for the first time in 6 years, you don't have banks participating in this market move, and you have a rare bull market where pharma, chemicals, IT, metals, they are the names that are taking this market higher. So I think the key takeaway here for people who are watching the market action every day and wanting to make money is to stay with stocks which move with the Nifty. And I think Reliance is a great example with what it's done in the last 3 months.
Okay, fair enough. Some questions coming in. So let's go straight to Sushmita, who joins in now. Hi, Sushmita. Good evening. Go ahead with your question.
Hi, this is Sushmita. I would like to ask, what is the minimum to maximum time frame that we should consider to do a technical analysis for any equity stock, to do an intraday trading or delivery based?
Okay, thanks Sushmita for that question. That seems to be the most common question, right? The time frame, when to enter, when to exit, and also particularly for intraday trading, or when do you do delivery based trading? What would your answer be?
Well, yes, I think this is a point that has been raised by a lot of people. I keep getting queries on this on social media as well. I think it's important to understand the mother trend. So if you are indulging in intraday trading, for example, you could use the 60-minute chart as the mother trend. So once you understand the trend on the 60-minute chart, you can then filter it down with 15-minute charts. I see a lot of people in the markets, coming in the morning and then looking at the first half hour of trading, taking positions in the markets. I don't think that that's the right way, and that's really a sustainable model. But you need to mix the two time frames, and when you mix a 60-minute chart with a 15-minute chart for your entry and exits, I think that really works well for intraday trading, and that's exactly what we recommend at Goldilocks. But if somebody is looking at delivery trading, what you can do is you can look at the daily chart and then filter it down with the 60-minute charts. I think it's very important at any point of time to look at two time frames to understand the market setup. This way I think your approach is going to be solid, and I think if at all there are some whipsaws or volatility in the markets, it gets absorbed in whatever I just said.
Okay, but another question that we get asked a lot is, these textbook theories that one learns or one learned perhaps in the 70s, 80s and 90s on technical trading, does it hold even now? I mean, do you look at any of that stuff, or have things evolved completely?
Things have evolved, Sonia, surely. I think, please understand, a lot of these textbooks on technical analysis were written in the 60s, 70s and 80s, and you didn't have social media, you didn't have algos playing an important role, information was not easy, to find, and all of that is available right now, and that's probably the reason everything has become really fast. The point that I made earlier, that it's all happening in turbo mode, and you don't see straight line moves anymore. It's just that the market has to see some turns. The trajectory is clear. If a stock has to go higher, it will go higher, but then there's going to be a lot of turns along the way that will try to move you out of that trend. So I think filtering is the key. I think that's really the best way to look at it. And some of the new age tools, I spoke about relative strength comparative, I think a tool that I really use. And also please combine volumes with your price analysis. I see a lot of people just looking at price and taking a decision on a particular stock based on the price move. Volume follows price. You need to use price and volume in conjunction to actually have a much more foolproof setup.
Okay, volume and price for a bulletproof setup. We have a final query coming in. I don't think we have too much time, but let's try and squeeze one in. Sanam Pasricha joins in. Sanam, go ahead. What's your question?
Very good afternoon. Thank you for giving me an opportunity to ask a question at this show. I was reading this book by John Murphy, and in this there was a chapter regarding point and figure chart. I was just wondering, since this is the oldest chart, is it still being used to find out trend lines, to find support and resistance, and is it better than the other charts? Thank you.
Okay, that ties in with our earlier question, right? Do you still use some of these charts? Gautam, your answer?
Yes, we do. In fact, point and figure are a very interesting form of charting because it reduces the noise. A lot of times, when we look at bar charts and candlestick charts, the volatility gets the better of us. But if you start using point and figure charts, it really, really works well on a short and even on a longer time frame. So I would strongly recommend, the viewer to actually use it on a regular basis. However, every chart form has its own positive. So let's not just make any study or any tool our favorite. You need to use all of them in conjunction to actually, make serious wealth at the markets.
Okay, Sanam, I hope your question has been answered, and we have run out of time. I know technical analysis would need a 1 hour or maybe a 2 hour session, right, to cover everything. But let's go in for a quick rapid fire as we generally do on Smart Money. So first question to you, Gautam, what is your favorite book on investing? A question that we get asked a lot. Investing or trading, whatever you wish.
Well, yes, I think the Bible for me is Technical Analysis of Stock Trends by Edwards and Maggie. That's the book I started off with a couple of decades back, and it is still as relevant as 20 years back. I think it's an absolutely amazing book, and any of your viewers who are interested in technical analysis, I think this is the stepping stone clearly. And once you master this book and once you have an idea as to what this book presents, you could go for some of the books of Mark Minervini. Think and Trade Like a Champion is something that I would strongly recommend. And I think these two books should really help you in your trading.
Okay, guys, so these are the books in case you want to, pick up any of them. This is where the masters learn from. And since we are in the new digital age, which is your favorite blog? I mean, any blogger that you love to follow?
No, Sonia, I'm not so much into blogs. The moment you look at multiple things, there's a lot of noise out there. So I try to restrict myself to the charts.
Okay, cut the noise. Fair enough. What about Twitter? I mean, I know you're on Twitter. Any Twitter handle that you love to follow these days?
Well, yes, I think it's Samir Arora. I think he gives you a perfect mix of market talk and humor. So I think he presents all of that really, really well. So I look forward to his tweets all the time.
Okay, so do we. I must say, we are big fans of him as well. Fine, let's drill it down finally to two things. The biggest stock call of your career and one stock that you wish you had bought but you didn't. So let me start with the biggest stock call of your career.
Well, there are many. I think if you look at the 2003-2008 bull market, there were a lot of stocks that moved up 10 times, 20 times, 50 times. But I would go for something more recent. It was Reliance Industries in the year 2017. And the reason I picked this stock because it was dull for almost 10 years. I remember there was a time when people said, Reliance is a wonderful company. Why is it not moving? And for 10 years, the stock did absolutely nothing. And when that breakout happened in 2017, we actually caught it very, very early. And we are still riding the story, and I think there's clearly a lot more to come. So I would say my best call was Reliance because we went against the herd mentality on that stock at that point of time. And the other question was on a stock that I missed, I think as technicians we get into stocks very early.
Yeah, no. Before that, you said Reliance is a stock that you caught for the last 10 years. But what's the stock for the next 10 years that you're catching now?
Well, there are a lot of themes. I think clearly some stocks in the pharma space, in the chemical space and IT, I think mid-cap IT is something that's very, very interesting. So without really giving names, given the kind of world that we are living in and the disruption, the point that I keep making all the time, I think mid-cap IT is my story of the next 10 years.
Okay, well, on that note, mid-cap IT is the story of the next 10 years. Thanks a lot, Gautam, for joining us. We would have loved to chat some more, but unfortunately we've run out of time. And to all of you, keep those queries coming. Sorry to those whose queries we couldn't answer, but Smart Money will be back again, same time, same place next week. Thanks so much for watching.